Hey traders, Raghee here. Welcome to Charts and Coffee. Happy March, everyone. All right, should be good to go. All right, great to see everybody. Happy Monday. Good morning, good morning. Yeah, so new month, new direction. That's a good question. That's a maybe interesting point. I think we're going to continue to see more of the volatility from bonds that we have been seeing. And so it will be very interesting. Although I do think that we're going to be looking at some more. Actually, I'll share what I was looking at here earlier this morning. Some of the ARK Invest holdings. I like making notes of some of these. Those ARK watch lists become almost separate watch lists, oftentimes very uncorrelated watch lists for us. But yeah, those are things that we will continue to look at. So what you're seeing right now, I know it's a little dizzying. This is my TradeStation platform. And one of the things that I like to do in our Sector Secrets Mastery is I'll look at a particular narrative. In this case, it's the S&P. And then I'll look at the heavily weighted stocks within it, because the S&P is not going to go anywhere where the heavily weighted stocks aren't going to let it. And then by looking at the individual heavily weighted stocks that are outperforming right away with Google, Berkshire, and JP Morgan, the only double green on the dailies, that tells you the XLC ETF and the XLF continue to be outperformers, maybe in a way that's going to be even better than relative outperforming the S&P. And that's sort of the secret to Sector Secret. That's a big thing that I do every single weekend. And then I can, take it back to the daily time frames and look at what my focus will be there. All right, so let's get to it. Based on my rules, hey there, James, what would be my first target for Johnson & Johnson based on my rules? Based on, well, first of all, XLV has got to be a part of the narrative here, although Johnson & Johnson's been a relative outperformer, but XLV has been really tough. Right, that's why we haven't wandered back in to XLV. So Johnson & Johnson can continue to defy the gravity, the pull of XLV. I wouldn't look any higher than the most recent swing high. So James, I wouldn't look at anything more than the recent swing high. So probably around 164.35 to 164.40. Yeah, just focusing on that. Bish. My Twitter was hacked. You sure it's mine? You sure it's my Twitter? The people who like to imitate me, and this is probably as good a place as any to bring it up. The people that like to imitate me like to take the R and the N in my name and make it an M. So make sure it's actually me. And my Twitter looks actually... it looks fine. So make sure it's actually me, my friend. There's a lot of folks, unfortunately, out in social media parading around as me. My social media is always going to be Raghee Horner with no space. So make sure they didn't pull a fast one on you. And I will never reach out to you via social media to say, hey, I'm investing in Bitcoin or Forex or binary options. If someone reaches out to you via LinkedIn, it ain't me. And they do a very convincing job of pretending to be me on Insta, Twitter, apparently. LinkedIn's a bad one. So yeah, it's on social media. It's always going to be Raghee Horner, no space. All right. So thanks for the heads up and a good warning to everybody else out there. All right, regular guy. Sorry. I'll get to you right there in a moment, regular guy. Question about XOM, commodities go higher. I was debating whether to talk about OPEC, because we have an OPEC meeting on the 4th or 5th of the week, and crude oil as being part of this reflation trade that we're seeing. Copper still very strong, crude oil very strong, and there's going to be an interesting OPEC meeting in terms of what these production cuts will continue to be, and whether or not crude can really still be on that parabolic trajectory higher. Well, that's of course going to affect the likes of XLE, OIH, and even XOP. That's the Energy Select Spider, the Oil Services, and the Oil Explorers. Now, XOM is part of the oil. XLE is the Energy Select. So XLM is part of that narrative. Yeah, I think it continues to move higher. One thing you could do, and it's really up to you. I don't think there's any right or wrong if they look as similar as they look. Exxon and Chevron are your two heaviest weighted stocks within the XLE. So either you look at relative outperformers, and I'm going to take you back to this kind of crazy chart for a moment, because once you understand what this chart actually is communicating to you, it's one of the best ways to understand relative outperformance. So I'm going to open up the XLE multi-chart that I track. And this XLE multi-chart that I'm tracking here, you'll see Exxon, Chevron. Well, what else is relative outperforming? Almost everything. So I will tell you, while it makes a lot of sense to think about Exxon, look at all the individual boats within this overall tide called the XLE ETF. If I can get a pullback on Exxon, I'll probably get a pullback on XLE. So I would consider actually XLE in addition to, or even in lieu of, the XOM. But yeah, you got to like XOM and Chevron, CVX, in order to play XLE. And ideally, you like the trajectory of crude oil if you're going to do either. So thank you for the question. I think that's a good market to focus on. Great point. And the timing is especially good. We don't call the newsletter that I put out, twice a week? The Countdown Trader for nothing. We're always looking at certain events that the market's going to respond to, certain events that we're counting down. It could be the countdown to the clearing period for me as a day trader, or the countdown to the end of the day, countdown to a specific economic data report, earnings, the end of the month, and end of a quarter. That's something that's always is always at play, and probably the most overlooked of the four factors that move the markets: price, volume, volatility, and time. So yeah, the timing is excellent on that one. All right. Hey there, regular guys. Circling. And by the way, you can check out the newsletter at countdowntrader.com. All right. So next question is, any thoughts on True and RDD? All right, let's jump on over there then. True, it was moving. It is moving more or less in an uptrend, but I can't say that I love it. I wouldn't short it, right? But I mean, I guess I would ask, number one, and I do not know this, so I would say go look. Is True in an ETF? In other words, is it in a actively traded ETF? Number two, is there anything that's similar to True that's a relative outperformer as compared to True? Right. So that would be, before I can even give you a breakdown on that, I would say start there. I mean, that's very much the process that we follow in Sector Secrets. And the other one is RDD. All right. I'm not picking up RDD. But if they're both RRD, if they're both past earnings, then yeah, RRD clearly is moving higher, but it's gone parabolic. So you got to wait for a pullback. So interesting narrative. True is a little bit shakier on the structure. And RRD looks great, but it's gone parabolic. All right. Okay. Next up is my opinion on EV and Tesla. So one of the things that I get questions about Tesla almost every day. It's probably one of the more popular stocks here at Simpler. And one of the most unfortunate things for Tesla is the fact that it got added to the S&P, if you ask me. This little run in here was great for Tesla, because what happened in that spot was that Tesla was being added to the S&P. And by being added to the S&P, you had all these funds, benchmarks, portfolios, and the ETFs all having to add Tesla. And then now it's happened. So as far as I'm concerned, Tesla was able to operate sort of apart from the broader market narrative when it wasn't part of the broader market narrative. And now it's a different animal. I don't think we see moves like this in Tesla again. I really don't. I'm not saying never again, but what would be the catalyst for that? That kind of parabolic move, meaning that swift a move in that short a time. So am I kind of saying we'll probably not see that kind of move again? Yeah, I really am. It doesn't mean we won't see uptrends. And we have anything but an uptrend in Tesla right now. So my opinion on EV is very optimistic. I mean, I think Cathie Wood, ARK, genius. She's got a lot going on. But Tesla's narrative is not an EV. If you listen to a lot of what Kathy Wood talks about and a lot of other folks, the autonomous driving AI aspect, let me put it to you this way. I believe Google Maps has, in terms of all the mapping and information they have about roads and driving and condition, they have some 30 million miles of data, right? And AI is a data game, right? I believe Tesla, no hyperbole, is something around 30 billion. So I think the real play for Tesla isn't the cars in that sense, consumer. It's going to be the AI. It's going to be the autonomous. It's going to be the autonomous taxis that I think Tesla's got such a unbelievable. I mean, they've got a 10x jump on Google. And then whoever comes behind Google, I don't know, TomTom. So my opinion on Tesla's and the EV is less about the EV and more about the AI, the autonomous, and the autonomous taxi. That's the future, where if we start to see Tesla continue to move higher, it's going to be, as far as I'm concerned, based on that. So I hope that makes sense. And thank you for the question. But last year's move wasn't anything really more than, I think, a lot of the front running of Tesla having gone into the S&P. All right. I mean, I think that's the parabolic nature of what we saw there. And again, I don't see that happening because that was a unique occurrence. All right. Next up here, WB. Hey there, Stephen. All right. WB. Nice uptrend, double green. Weibo. So Weibo's going to put you in I think Weibo might be weighted in MCHI, FXI, those kind of names. So definitely see what this particular boat is in terms of the overall tide. Pullback buys, I'm fine with that. But before you go into that, do that reverse search I talk about so much. That's at the heart of what we do in Sector Secrets, which is know what your stock is doing, of course. Know its proximity to earnings, its overall trend, volume levels, things like that. And then, as a part of that overall research, also check where WB is weighted and who it's spending time with, and where that larger tide, where that larger grouping, how it's affecting WB. Is it a laggard? Is it one of many that are doing well, like in the case of XLE and Exxon? So you want to know sort of who it's hanging out with. All right. Okay. So next up is, hey there, Didier. Which chart holds more weight, or is it relevant when evaluating the overall market, futures or ETFs? I wouldn't compare futures or ETFs because remember, it's really actually kind of disappointing that ETFs. So if you go take a look at the Chicago Mercantile Exchange, there are futures on sectors. No one trades them because of the popularity and the low cost of ETFs. So to your point of which holds more weight, well, I mean, I can look at SPY and I can look at ES. And really what I want to compare is open interest and volume. Size does matter in terms of that influence, right? So who is more influential? I don't know that I would necessarily try to say, well, one's holding more weight, although I will say if I'm looking at the SPY and the S&P futures, I'm going to look at the S&P futures because one thing the S&P futures or any futures contract has over the sector ETF is that it's trading 24 hours. So even if a particular sector ETF has a lot of volume, the neat thing is when you compare it to the futures contract, I can get a little bit of insight into how that sector may move based upon the fact that that futures contract closes for a grand total of 75 minutes a day. So I've got a much more 24-hour look. I've got to look at what Asia thought of the S&P 500 and what Europe and the UK thought of the S&P 500, as well as the US. Remember that when it comes to XL, C, Y, K, SPY, QQQ, DIA, IWM, those are just at 9:30 to 4. So if you want to put in one of the factors that's so important, time, I would say start with the broader indices at the futures level, and then you can dial it in to the sector level, and then you can dial it into the individual stock level. So start like a funnel, right? Just pour it all into the broad part of the funnel, and then it will just naturally bring you to the relative outperformers. And maybe that is at the index level. I will tell you, in CHOP, you typically don't want to focus at the index level. You want to get a little bit more granular. Think about the sector level and think about the stock level. All right, so I hope that helps. Okay, next up is looking for some more volatility. We built. Yeah, I agree with you. I agree with you. I don't disagree at all. I think we're probably going to see more volatility. The beginning of March is not going to be for people who are faint of heart, who don't have some strong stomachs. It will be. Okay, let's see. Can we take a look at Save? I'm going to grab just the first one there, Patrick. Yeah, so when we're talking about airlines, as you are, I would start at the JETS level. I would start at JETS. And then Save, of course, is heavily weighted within that ALSK. Yeah, so yes to all of that, but I might say I'll focus on the broader, the tide. And again, in the context of an uptrend, if I can pick an individual boat that's a relative outperformer, I'm fine with that. But if I can play the broader tide, knowing that many of the individual stocks within that ETF, within that niche, within that sector, what have you, are moving higher, I get to place a bet on all of it. It's a high concentration weighted bet, so make sure the name that you like is higher on that list. But I like the idea of JETS. If you like all those names, what I would recommend is keeping an eye on JETS. Okay, so I hope that helps. All right, gang, and just like that, we are out of time. So thank you as always for making time for Charts and Coffee. And I will see you all tomorrow, same time, same station. Have a great one, gang. Be good to each other. I'll talk with you soon.